Okay, so good evening, mentorship traders. We are on the 15th of April to 8:30 p.m. in the evening, our usual Wednesday evening session. I welcome mentorship traders who have joined us over the last week. In these Wednesday sessions, we generally first talk about the index, the Nifty, Bank Nifty, and how the market has behaved and what we anticipate going forward. This takes around the first 10 to 15 minutes of our session. And then we take up your doubts and questions that you faced in your trades or in your learnings. So starting off with Nifty, I have the daily chart of Nifty in front of me with our usual indicators. I would first bring your attention to the monthly chart over here. And based on this monthly charts, there are a couple of channels with the RSI that we can draw. And I think I have drawn them on the spot markets. This is the spot market chart. And these are the two probabilistic channels, as you can see here. Yeah. So these are two probabilistic channels. I use the word probabilistic because this validity of this low is not clear yet. We have to probably wait for a month or so before I get a confirmation that this on a closing basis is a low. I have made an assumption this will hold, and based on that, I have these two channels on the long-term perspective, which means that a break of this level, this zone on the downside, that is a close below 8,500, close below 8,500 on the monthly charts, will make a breakdown, will imply a breakdown from this channel and can bring the prices further down. If it holds, it's good. It can give us further moves. Such channels cannot be established from the weekly charts, but from the daily, I have a clean channel over here. This is the recent bounce back, and based on which I have this falling channel, which means that we are at the upper border of the channel. And the index needs to close above 9,100, 150 on the upside. It tried today. It did try today really well, opening close to 9,200, going to 9,260, but at the end it failed miserably to close down with such a long red candle. Not only that, it has slipped inside the channel, which suggests that it can dip a little further down. It may dip further down. If it does, we have this downward sloping channel. The importance of this downward sloping channel is we need to have a close, a confirmed, sustained, confident close above 9,150, 9,200. And then we can say that, yes, the index has turned out really well after this sharp fall, and the index is likely to go further up. If not, then it stays within the channel, and in that case, we will have to look for further lower levels. One look at the lower time frame, which I use a 75-minute time frame, you would know. If I zoom in, you can notice over here that this is the immediate short-term channel. I'm talking about levels for tomorrow. The market is within this rising channel. And again, this is a probabilistic channel. This is the low, below which, of course, there are high chance it will come down. If it bounces back, then you know, you can clearly see where the resistances are likely to come at. So this is the rising channel, which the Nifty is trading within right now from an intraday perspective. So levels to keep a watch would be close to 88, 88.50. A break of 88.50 can bring the market down. In that case, these kind of rising channels, rising gaps will come into play. This is at close to 8,400. Currently, it's finding supports at this rising gap. On the upside, as you can see, there are multiple falling gaps wherein the index can find resistances. Nevertheless, this bounce back that we have seen so far from the index hitting a low of 7,500, there are a couple of key points I would like to reiterate. Number one, We were looking at two levels, sub 8,000 and sub 7,000. Sub 8,000, the index did fall and it was an immediate bounce back, which clearly confirms the point that sub 8,000 was a psychological support. It further strengthens that view because we don't have a short-term bounce back, we have a two-legged bounce back as of now. So by Elliott principle, you will say A, B, C. So the index has given the first bounce back led by short coverings, which fizzled down a little bit, but then it went up and made a higher high. This is a good sign. This is a meaningful bounce back and not just a small dead cat bounce which immediately gets dissolved. So we have a meaningful bounce back. We are at resistances. We need to sustain above 9,200, and then I think the index will be eyeing back that 10K level. The 10K is where this falling gap is, this one. Whether that will come or not, that time will tell us. But right now we are at resistances. We failed to hold on to the strong opening that we saw today, and it kind of gives us a signal for the rest of the week, that is tomorrow and day after. The market can stay a little bit on the lower side. Which are the stocks which underperform? Which are the stocks which pull the market down? Reliance, the HDFC and the HDFC Bank. Kotak Bank, yes, but nothing compares to the weightage which comes from Reliance, HDFC, HDFC Bank, Maruti to some extent, TCS and ICICI Bank. We mentorship traders, we try to focus and specialize upon swing trading setups. And yes, you will be getting some strong swing setups for tomorrow, day after, and maybe next week also. So it's the heavyweights of HDFC Duo and Reliance which has actually dragged the market down. And on the other side, which contributed on the positive side, is your FMCG consumer plays. Hindustan Unilever, ITC, Asian Paints, Britannia, cement stocks like Ultra Chemco, and a little bit of IT like HCL Tech and Infosys. But then the weightage that comes from these stocks are not close to what the combined weightage of Reliance and the HDFC twins bring into the picture, which you should understand that when the markets are showing weakness, it's the heavyweights which are showing weakness, and the other pockets of strength are those like the pharmaceuticals and consumers, which is essentially the defensive part of the market. So looking into the scenario, going back to Nifty, looking into the scenario, I would say from a short-term perspective, if you see a close or an opening below 89.20, let's say 8900, and the market stays 8900, then it will probably imply that it's a sell on a rally, sell on a rise kind of a market for Thursday as well as Friday. However, this on the 75-minute time frame is a beautiful aim and shoot setup which is cooking up. This can give you a bounce back, and if it does, you know 9250 to 9400 is the short-term resistances on the upside. When I look at the daily chart, I can clearly see resistances here, bearish harami pattern, bearish engulfing kind of a patterns. So bearish patterns are shaping up, which I feel that the market will stay a little soft for the next 2 days. In terms of the stocks that you should watch for, if it dips down, Maruti is definitely one, TCS is the second one. HDFC Bank has already given a move today. It sold off quite sharp with HDFC and ICICI Bank. These are the few large caps you should definitely keep a watch. Pharmaceutical stocks are having its move up. Let them enjoy. Don't try to contra sell them. Do not try to short them just because of the fact that they have gone up too much too soon, because the momentum is there, very much intact. So we would not like to touch the pharmaceutical stocks. go with the finance, the banking stocks, which are showing weakness and may continue to show weakness further. All right. So that's the view on the markets, as we always do. Let's now quickly take up your doubts and questions and the trades that we are looking forward to do tomorrow and on Friday. So please start asking your doubts and questions.